Michael Burry is betting $1.1 billion that the AI boom is a circular fraud.
Expert Joseph Wang joins our analyst panel to reveal why this manic market rally is failing.
We have distilled the key signals on Apple's supply chain and the coming inflation data.
Watch for the specific price level that triggers a total liquidation on the S&P.
The markets were incredibly active this week, with the S&P 500 hitting fresh all-time highs.
It's not just the stock market. We also saw a joint US-Japan currency intervention, which is something that hasn't happened in decades.
Is the intervention actually working to stabilize the yen?
The host described a very strange dynamic where both index prices and implied volatility are rising at the same time.
That's typically seen in single stocks during a squeeze, but seeing it at the index level suggests speculators are loading up on calls due to a fear of missing out.
So this is more of a manic melt-up than a sustainable rally?
Exactly. He views this as a sign of the later cycles of a bubble market.
The non-farm payrolls report showed a 20,000 job loss, which seems like a clear negative.
Not necessarily. The unemployment rate actually trended lower, which suggests the labor market is tightening, or even overheating, due to demographic shifts and aging boomers.
So zero job creation might actually be the new normal for a healthy economy?
There are increasing reports that the US has spent a significant portion of its interceptor missile stockpile.
Because they lack the ammunition for a real conflict, the administration seems to be pushing for a Memorandum of Understanding version 2 with Iran to end the hostilities.
Does this mean that US is essentially conceding control of the Strait of Hormuz? Is the AI trade finally over now that some of the Vanguard stocks have imploded?
It's not over, it's just rotating. While memory stocks are languishing, the mega-cap 7, like Microsoft and Amazon, are getting a second wind and carrying the indexes higher.
Will the joint effort from the US Treasury and Japan be enough to save the yen?
The host predicts it will fail. He thinks it's a token gesture because the interest rate differentials are just too large, while Japan keeps rates at 1%.
What is the likely endgame for this index squeeze?
Given the unstable dynamics, we should expect a sharp V-top reversal. This kind of manic activity can last for weeks, but it eventually breaks hard.
So the takeaway is that policy optics aren't fooling the market right now.
Exactly. Whether it's currency intervention or jobs data, the market is looking through the noise at the underlying fundamentals. We'll have to see if the Bank of Japan finally adjusts to the reality of the situation.
Matt DeWolf highlights that the Jefferies downgrade of Apple is hitting just as the market prepares for the inflation report.
The timing is tough because Apple is a major heavyweight in the S&P 500.
Is this downgrade just about a canceled glass iPhone or something bigger?
It is about the supply chain signals suggesting a shift in growth expectations.
The analyst argues that Apple's weakness creates a leadership vacuum.
Can the market sustain these levels if its biggest component is dragging?
It makes the S&P 500 much more vulnerable to any surprises in the Wednesday inflation data.
There is news about Microsoft significantly raising production for its own AI chips.
The Maya 300 chip program is showing signs of life and targets external competitors.
So Nvidia might finally see some real competition in the hardware space?
That is exactly what the market is reacting to this morning.
The host identifies 7,740 as a key inflection point on the ES futures.
If we drop below that level, we could see a quick liquidation toward the previous all-time highs.
Is the current consolidation just a setup for a higher low?
Technically, yes, as long as that support zone remains intact.
While some tech is holding up, AMD looks relatively weak on the charts.
It is opening under its declining 20 and 50-day moving averages.
Does this mean the chip rally is becoming more selective?
It certainly suggests that money is moving out of the underperformers, like Intel and AMD.
Looking at the Fed watch tool, the expectation for September is another pause.
The labor data showing a job loss of 23,000 reinforces the idea that the Fed can hang tight.
But wouldn't a hot inflation print change that outlook?
If CPI comes in hotter than expected, the idea of a pause might go out the window.
Everything seems to be waiting for that Wednesday morning data release.
The market is currently in a neutral stance, which we call the patience pedestal.
So we should expect chop and slop until the numbers are actually public?
Exactly. The inflation report is the judge and jury for the current market range.
The host's final word is to keep size in check and respect the technical levels.
Wait for the market to resolve its current range before putting on heavy risk.
Patience seems to be the most valuable asset this morning.
The host takes a deep dive into Michael Burry's massive gamble against the AI sector, and the scale is significant.
Is this the same strategy he used for the housing market crash?
It is similar. He has placed over $1.1 billion in notional value on put options, specifically targeting Nvidia and Palantir.
The host notes a strange move. Burry deregistered his entire fund from the SEC.
That means he is no longer legally required to disclose his trades to the public, essentially taking his strategy underground.
The core thesis here is that the AI boom is less about organic growth and more about financial engineering.
The host explains that Burry sees a circular economy where cash leaves one balance sheet and returns as revenue through a round trip of deals.
So companies are essentially buying from themselves to make their numbers look better?
Exactly, with circular deals estimated to be worth about $800 billion. One major red flag the host discusses is how cloud giants account for their servers.
Are they claiming the equipment lasts longer than it actually does?
Yes, by claiming servers last 20 years instead of 5, they can hide up to $176 billion in costs by 2028.
The host breaks down a specific example involving a round trip of cash.
Nvidia invests $100 billion into OpenAI, which signs a deal with Oracle, which then buys chips from Nvidia. It is a closed loop.
And analysts estimate these types of deals total nearly $800 billion?
Burry isn't just targeting software. He recently added a short on Caterpillar.
Since Caterpillar provides the natural gas generators for data centers, investors are pricing it like an AI stock, which Burry believes is a mistake.
What is the endgame if Burry is right?
The host suggests it could lead to a 1999-style moment on Wall Street, causing the overall economy to suffer significantly, since AI hype has driven most recent gains. Specific to his Nvidia bet, he has picked 110 as his number.
If it drops below that price by 2027, he cashes in big.
Is there a chance Burry is just early or even wrong this time?
He was definitely early in 2023, and the market has risen over 131% since then?
True, and with Palantir reporting a 93% revenue increase, his theory is facing its toughest test yet.
And that's the full rundown for today. Want the final verdict, where these experts agree and where they clash head-to-head? It's in the video linked below.
Give this a like if it saved you time, and subscribe so you don't miss tomorrow's breakdown.